We begin again with the top issue this year for Americans, the economy. Earlier this month, we spoke with the head of Bank of America, Brian Moynihan, about the state of the economy as we head into 2026. Our CBS polling is showing that the most Americans asked this question say their holiday items are hard to afford. Yeah. They're pulling back because incomes are not keeping up with inflation. But it's a very different story when you look at the upper income brackets. I know you see data of actual transactions. Are people doing what they tell us they're doing?
We not only see it in the aggregate, we also see it in pieces. And so if you look in the aggregate, the amount spent through the Thanksgiving weekend on Black Friday and Cyber Monday, through all the month of November and the first part of December, it's up 4.25% versus last year's November. And so it's growing. And then if you look by terciles, 3 buckets of income levels, it's clear the people in the bottom income level and the lower income levels are spending a little faster growth rate, but still growing, and then the middle and upper faster. So what they're telling you is what they feel. What they're actually seeing is spending is reasonably solid heading into the end of the year. And it's been kind of going along like that all summer. Now, wages have grown, but inflation bothers people. Jobs are, the unemployment rate's very low, but it's been rising. So there's a lot of discussion in there. But at the end of the day, people are spending. They have good credit quality. They are employed. And we can see wages growing as people's paychecks come in at a 3% clip. So it's pretty solid right now.
Is that still, though, stilted towards the upper income brackets? Is it that K-shaped economy some people talk about?
Our team looks at this. Yes, the growth rate difference is higher, but all the third, all 3/3 are growing. And
you think that'll continue?
Yeah, and that's been continuous. And so that's the question. They grow at different rates, but they're all growing, which all means they're putting more money in the economy than they did this time last year.
Mm-hmm. Why do you think people have sentiment that's low, but spending that's higher?
It's, you hear about it, you've talked about it. It's this question of affordability and prices and trying to figure out how that, because we had a very strange process from 20 through now. We had COVID lockdown, then we had all the stimulus, then we had high inflation, and then we had wages caught up to it. And if you draw a line and say, here's wages and here's spending, and here's price growth, they stay in sync across a long period of time, but they went at different times. And so they saw the inflation in 23 and 24 that was on their minds, and they want to see it subsist, and it'll take a little while to subsist. But as you go into 26, having come through 25, the incremental hit of that would be lower, and even when the Fed looks at it, they think inflation keeps working its way down. But it's what people feel, and you can't discount that. And it's also at certain job categories and stuff, there's been more dislocation, and that's due to some of the government downsizing and some of the other things going on. But it's not widespread. At 4.6% unemployment is in the last number they published. Mm-hmm. That's still in our business careers is actually a very low unemployment rate, frankly.
Mm-hmm. So in the past year, trade and tariffs, there were a lot of shocks to the system. Yeah. It was a big concern. But Bank of America now projects President Trump's strategy is one of de-escalation, not escalation. Does that mean you see this trade war with China cooling off?
Well, I think if you go back to where we were in April, there was a lot of lack of understanding about where this would end up, and that affected small businesses and
medium-sized businesses. They were shocked.
The sheer size, the volume, the dollars across the board, et cetera. What you see now as time's moved on, it's sort of a 15% on one side, and then a higher number based on people who won't commit to purchase from the U.S. or won't commit to lowering their non-tariff barriers and things like that. And so the question, when I talk to foreign governments and they ask you the question about what's this all mean, or foreign CEOs, you say, look, you got a choice. You can be here or be here. You just have to make the choice. You're going to drive more towards America, and you'll come down to 15%. To go from a 10% across the board to 15% for the broad base of countries, not a huge impact. And that's where our team says it's starting to de-escalate, and that you're starting to see the resolution of the discussions into 15% here, 17, different numbers. When you put China's a different question because of national security interests, the rare earth minerals, the magnets, batteries, just AI, all that stuff. It's a very different case. And I think also between Mexico and China, the USMCA, which has to be redone, is also a different case. But broadly in the world, you can see sort of the end point here, and now they've just got to, it's got to work through the system.
How much of a toll has that taken on small businesses? I understand B of A is the largest small business lender.
So we're the largest small business lender, and if we were sitting here in the second quarter of this year, it was a big toll. They were very, because rates have gone up, and that costs them more money because they borrow on revolving lines of credit. In other words, they borrow at floating rate. And then the tariffs came in and caused them, I'm not sure I can get the goods at what price and how can I commit. But as you went through the year, rates came down a little bit. So their issue right now is, can I get the labor I need to do to bid the contracts to do the work I'm doing? Because the immigration policies haven't settled in yet, and that's causing people concern. It's not that they agree with them or disagree, they just need to have the answer, and that's what they're looking for. So if you think across 4 policy regimes, tax, trade tariff, immigration, and then ultimately deregulation, you've seen a resolution of a lot of them, but I think the next one for a small business, what they tell us is labor availability. How they get there is, I need people to do this work, and I need to be dependable. They're here, so give me a set of rules and I'll go play with them, but I need to be clarified of what the rules are.
The Fed says activity in the housing sector is weak. What do you see as behind that hesitation?
There are 2 parts to it. One is the rate structure is higher, so it's just slowed down the activity. So if people are going to sell a house to move up to a bigger house or something, the cost of debt's going to go up. So that's slowing down that activity. The second is building, and there's housing volume shortages all over the country. You could have single family, small multi, 4 units, things like that, or even more bigger multifamily in major cities. But there's a universal housing shortage because for so many years, it's been hard to get housing permitted. And so the advice I give to anybody is, you're probably not going to see the 10-year rates go down. Our teammates think the Fed funds rate gets to low of 3, but the 10-year rate stays between 4 and 4.5, which means the mortgage rate won't be a lot different than it is today. But if you increase supply, you'll keep prices flat and wages will grow through it. And you're starting to see prices have flattened out in many places. So you got to build supply, and you got to get permitting done, and you got to do that is probably the solution. Moving mortgage rates 50 basis points will not be a huge change. When you have a bunch of people with 3% mortgage rates, that's not going to be a change. And by the way, for the American economy, we do not want to have an economy that has to have that low rate structure again, because that means we're not growing, we're not successful, and we're probably offsetting a recession. So we shouldn't be cheering for 3% mortgage rates. It was an anomaly that happened, and now we got to get back to normal.
Well, you do hear the administration talk about rates coming down as a good thing.
Yeah.
You're just saying it's not a simple, quick fix.
Well, for the housing market, because there's 130 odd million households in America. Half of them don't have a mortgage. This whole lock-in question is not even a relevant question. They rent, and so you got to bring rental affordability is a question. Or they own outright, and that's a different question. They inherit a house, 3rd generation or something like that. So it's a very complex thing. But simplistically, if mortgage rates come down, people can pay more. The reality is, if prices come down, people have more affordability on that side. So I think it works itself through.
So let me ask you about Fannie and Freddie. Taxpayers took a stake during the financial crisis in these mortgage lenders. The Treasury Secretary said that they are expected to return to the public market in the next year, with the government selling a portion of that stake. Does Bank of America have a role in that transaction? But for consumers, is that actually going to push up the cost of owning a home?
I don't talk about client relationships, but look, it won't if they keep the guarantee. And the administration knows that, and Secretary Bissett knows it. That guarantee helps keep that mortgage rate down, but also provides a 30-year mortgage. Because now, when you make a mortgage loan without a government guarantee, for a borrower who may be on the qualification levels there are more advantageous to borrow, you're making a decision for the next 30 years that the borrower is going to be okay, or a lot of years. So that guarantee is critical to the U.S. getting fixed-rate mortgages and having a lot of mortgage availability. And then they've run the things pretty responsible since the financial crisis. Down payments have stayed substantial. So the credit quality of current portfolios is pretty good. And they can't lose that, because that was the reason, one of the reasons why we had the financial crisis was the low down payments and lots of mortgage loans with zero equity in them. And as soon as pricing on houses came down, the whole thing exploded, and all America was affected. So I think they're very mindful of all that, and I think, but they're critical to the U.S. housing system. They always have been. They're a great company. They're an iconic company for the U.S., frankly. Now they put them together and are running well.
So the president has announced that he wants all these sweeping changes to the Federal Reserve. Chair Powell is set to retire from the job in May. How much does that job matter to the consumer? How do you explain that?
Well, it's one of the interesting things. So the president's going to appoint a new chair of the Federal Reserve. He's got great candidates. He'll appoint somebody, and we'll help that candidate get the information, be successful, and so we'll see what he does. But that's his prerogative. That's he should do. There's, in my mind, there's too much fascination with the Fed. We're a country that's driven by the private sector, by what people do, and in the businesses and the companies, small companies and large companies, medium-sized companies, and entrepreneurs and doctors and lawyers. All these people drive our economy. The idea that we are like hanging on the thread by the Fed moving rates 25 basis points, it seems to me we've gotten out of whack. And so we got to get, since the financial crisis, the Fed had a big role in stabilizing the economy. That's what they're supposed to do. That went away a number of years ago. It came back a little bit in COVID. They're a lender of last resort. They're there to stabilize markets and price. But other than that, you shouldn't know they exist, quite frankly.
So you don't worry about all this, hand-wringing of political interference with the Fed once that new position is.
The market will punish people if we don't have an independent Fed, and everybody knows that.
CBS News and the Free Press have secured a partnership with Bank of America for Things That Matter, a series of town halls and debates designed to revive conversation on topics that matter the most.